Welcome to ForexTV.com. Today is Thursday, February 7th. I'm Remy Hoki for your New York Forex Market Buzz. In New York afternoon trade as of 1:10 p.m. Eastern Time, Euro-dollar is at the 1.4460 level. Sterling dollar is trading at 1.9407, while dollar-yen is at 107.47. Earlier today, the Bank of England reduced its benchmark interest rate by 25 basis points to 5.25%. Meanwhile, the ECB left rates steady, and the central bank has left its key interest rate at 4% since June of 2007. And taking a brief look at U.S. data, initial jobless claims declined 22,000 in the latest week. Following the 69,000 climb in the previous week, this was only a partial reversal of the surprise spike in the previous week. And the 4-week average rose to 335,000. And taking a look at the National Association of Realtors pending home sales index, which fell 1.5% in December. Joining me this afternoon is Matthew Strauss, Senior Currency Strategist at RBC Capital Markets. Good afternoon, Matthew.
Good afternoon, Remy.
Thanks for joining us today.
Yeah.
Well, first and foremost, we've been seeing both the euro and sterling pull back against the U.S. currency. So, Matthew, I want to get your take on Trichet's comments today and also about the downside risks that were highlighted. And how does this translate into your forecast for euro-dollar?
Well, I think on the euro, the decision itself was universally expected by the market, but Trichet did come out a little bit more dovish than what the market was expecting, because if we just take one step back and look at the previous meeting, the ECB, after that meeting, came out with a very hawkish statement highlighting the inflationary risks in the economy and also the danger of wage negotiations spilling over into higher inflation. Now, although he started off again mentioning the inflation risk, he quickly moved to the downside risk to the European economy, and especially then the risk that the slowdown in the US is posing for the eurozone. And then he elaborated quite extensively on the downside risks, and consequently the market saw this as the ECB preparing the market to move to a dovish stance from this hawkish stance. So I think after today we could probably call this neutral, but opening the door to become more dovish. And ultimately we're looking for the ECB to start cutting rates by mid-2008. From a currency perspective, apart from some euro strength in the next few weeks, if we get further negative news from the US, we do see from Q2 onwards the euro remaining under pressure and slowly but surely starting to lose against the US dollar.
Well, let's move on to the sterling. The BoE move was not a surprise, but we saw sterling dollar fall below $1.94 in the session. So where's the UK currency headed against the US currency as well as the other majors of the yen as well as the euro?
Well, I think with the UK, the market was much more correct in their anticipation of first the interest rate cut, but also the statement afterwards. So it's a continuation of the sterling's weakness that we've seen of late. At the moment, short term, there's probably some further weakness ahead for sterling, but we do see a bit of a rebound for sterling against the US dollar towards the end of the first quarter, but thereafter, similar to the euro, sterling would struggle on the longer term basis against the US dollar. Against the euro, given that the BoE has started their easing campaign earlier than the ECB, and that we do expect at the end of this cycle the Bank of England would have cut much more than the ECB. We also continue to see the sterling under pressure against the euro.
Well, Matthew, as we continue to see volatility in the financial markets, this has been a key focus in terms of risk aversion as well as risk appetite. So both near term and looking further down the road in 2008, what's your forecast for the U.S. currency against the yen as well as the other yen crosses?
Well, I think in the short term, you're absolutely right. The uncertainty and the volatility in the markets, especially the equity markets, is at the moment supporting the yen as we see some carry trade unwinding. To today maybe a bit of an anomaly where the yen suddenly weakened against the US dollar, partly because of technical reasons and specific trades that were in the market just above 107. Once we broke that level, it quickly raced to 107.50. But we don't really see this as sustainable levels, and we continue to see the yen trading probably within a range of a 105.66 to a 107.90 level.
Okay, and before we wrap it up for today's interview, let's take a look at the dollar block currencies. So as we begin to see that global economies are not sheltered from U.S. economic as well as financial woes, what do traders of the Aussie dollar, Kiwi, and CAD need to be keeping in mind?
Well, I think on the Aussie dollar and the Kiwi, the carry trade theme and ultimately then movements in equity markets in the short term are very, very important, because equity markets, as a very sensitive, forward-looking barometer, are currently the most important driving force of these currencies. So for the short term, look at equity markets, look at risk aversion. Any further negative news from the US that might suggest that the US could enter into a deep recession will weigh heavily on the Australian dollar and the Kiwi. And I think we have to look towards the middle of the year, where domestic economic fundamentals will start playing a more significant role in driving the Aussie and Kiwi.
Okay, Matthew, as always, thank you very much for your insight and analysis.
You're welcome.
This has been your Forex Market Buzz with Matthew Strauss, Senior Currency Strategist at RBC Capital Markets. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.